Hello, yes, good afternoon, everybody. I hope you can hear my voice and also see my screen clearly. This is 19th of October. So today I want us to look at a very simple strategy which can be used for intraday traders. If you're that person who's looking for a strategy or you think you have a strategy but you need to build it further, then maybe you can borrow from what you're going to say today. So as I was saying, if you're looking for a strategy or you're just beginning, then this strategy may be as well good for you. So the strategy involves three things. The first thing which you must have is you must have the zigzag indicator. You must have the zigzag indicator. So we'll come here. I'll go to the chart. You must let's start with the Euro USD. So you have to have a chart like Euro USD or GBP USD or whichever chart, just as long as it's one of the main pairs. Then go to 15 minutes time frame, and then we attach the zigzag indicator. We attach the zigzag indicator. The period, the settings for the inputs for the zigzag, the depth should be 7, and then deviation should be 3, and then backstep should also be 3 or 2. So I'll make it a bit big. We are able to, so that we see exactly the zigzag indicator. Now this is the zigzag indicator, the one I've attached on my screen. You can see how it behaves. You can see almost everything about it. So when you have this attached, the next thing is you can attach two moving averages, or if you have a special indicator which determines the trend, you can attach it. So in my case, I have this indicator here. I have it at this period. This is, I'll give it a period of 52. This is a period of 52. Then I attach another one. That one, this should be red. So this one, I give it a period of 100. So you can see the difference. You can see the difference here. We have downtrend. We have a very good uptrend. So how we use this, it is not that when the zigzag indicator is crossing this line, what this helps us to find is just the trend. What these two lines helps us find is the trend. There is nothing special to them. So we have the zigzag, we have the two moving averages, and then the next thing is now correlation. So we'll attach that later, but not now, but we'll attach it later so that you see exactly what I'm driving at. So anytime you have the slow period moving average above the fast period moving average, that means we are in a downtrend. So when you have this happening, the slow moving average being above the fast moving average, that's a downtrend. So like in this case, we have a downtrend from this point, at least up to this point where they changed, and then it also had another change here. We had a downtrend, downtrend until somewhere here. Then we had a downtrend here, then an uptrend, then some downtrend, uptrend there. This is an uptrend, downtrend here, and then this is somewhere here. This is an uptrend. So how we use this is this: the highs and lows of the zigzag indicator are used as the stop loss. The highs and the lows of this zigzag indicator, we use them as the stop loss. The take profit, we trail it. There is no fixed take profit. Trail the take profit. So anytime the price breaks above the high of the previous zigzag high, we pick a buy position. We have our stop loss below the previous low, as long as the two moving averages are in that direction. So what that means is this, that when you have a downtrend like here, this is a downtrend here, then we see that this is giving us, there's a break above the previous top. There is no break, but there is a break below the previous bottom. then this is a good place to look for a sell. So we'll pick a sell. We'll have our pending sell limit. When you see that the price is up somewhere here, and this is giving us a sell position, and at the same time the price is not below this low, we'll just come here, place a pending sell stop there, have our stop loss above the high of this candle there. Then our take profit, immediately the price begins to go in money, we pick a sell position. So when the price goes down, we take the profit, it comes back up, and then we see that this is another low, we place another pending sell stop here, then we have our stop loss there. So you can see that the price actually used this level, it went down as we wanted it. The same thing happened here, the same thing happened there. We had a sell because you can see that the price is still, there is still this sell thing. So we had a sell there, the price went up, down, it went and took our profits there. Then we had still, this is not a sell now because the green line, the blue line is above the red line. So this is not a very good place to sell from. So you can see that this is how you could have traded on this day. You see that you could actually have taken all successful trades. You could have taken very good sell positions here. You see that you could have sold, you could have got very, very good profit there. So you can, another example is on this side where we have a high here. We have a high here. So we place a pending buy stop. We have a stop loss below this low. So the price actually moved a few pips. So this, you could have trailed it and you could have got out with some small money, not very big, but could have got out with some small money, which is still very good. So we have another high established. We could have a pending buy limit there, then our stop loss there. So you could have bought it, the price has moved up as we wanted it. We have another one there. So this is a very good buy stop. We have our stop loss there. You can see this has also ended in money. So understand one thing, that the main reason we are buying is not because the price has broken above the previous zigzag high. No, that's not the reason why. We are buying because the trend is upwards, and also because the price has gone above the previous highest high. And notice one thing, we are not using instant order entries. We are just entering trades based on pending trades. We are using pending buy limit, buy stop, and pending sell stop, such that when the price gets here, it enters exactly at that price. So that has gone into money. We have another one here. This also has gone into money. We have another one here. This, somebody may say that it has not gone much into money because the price has not completely gone upward, but you can see it actually attempted to move upwards. We have another buy here. This did not go as we expected it. It maybe if you had a very tight trail stop, then you could have taken that out. You could have ended in money, but not a very, very good one. So that's that. Let's see another good example. These are very good sell positions. So you may play around. You may play around with the settings, the moving average settings. You may play around with the period to say you can have wider period or you can have lesser period. You see exactly which gives you the correct results. But after that, you should be able to find a very, very good one. Something else. This is where most people go wrong. This is where most of us go wrong as traders. You find that somebody is looking at Euro USD and they're trading strictly like you'd come here and then you find somebody is looking at Euro USD, is focused strictly on Euro USD without caring exactly what's happening on other symbols that have the same base currency or quote currency. So what that means is correlation is very important. So when you're here and you want to trade Euro USD, you've seen a very, very good trend, which is the moving averages are showing you a very good buy. Before you pick a buy just because the price is above the or there is a high here which you shall have to place a pending buy stop, before you place that trade, check and ensure that on other instruments where we have Euro as the base currency or as the quote currency, you have the similar trend. So when Euro is showing you a buy, check and ensure that on Euro AUD there is an uptrend, Euro card, there is an uptrend. Euro card, Euro chef, there's an uptrend, there's an uptrend, there is an uptrend, and there is an uptrend. And on the USD charts where the USD is the base currency, ensure that there's an opposite trend, that is a sell. So like in this case, we look at Euro AUD, Euro USD, Euro chef, Euro card, Euro AUD, and other euros. We'll ensure that they're in an uptrend. But US dollar, Japanese yen, US dollar, Swiss franc, all those should be giving us clear downtrend for us to start looking for a buy on Euro USD. Does that make sense? So that is when correlation become essential. That's when you will begin to see the advantage of trading correlation. When the same thing is happening across the board, that is when correlation is important. If you have just one pair giving you a signal, do not trade it. So if you have maybe Euro USD giving you a buy signal or a sell signal, but you can't find the same signal on other symbols that have the same base currency or quote currency, ignore that signal. Ignore that signal. Do not trade it completely. Do not bother to trade it completely, because you will end up trading it while all this was showing you a different signal, and you lose there. Then you start wondering how comes you're losing. It's because you followed the euro you are trading was not in correlation with other euros. So one thing you should understand is that euro is the same across the board. If you are looking at Euro USD, it's the same euro across everywhere. So when this is giving you the same thing, should be 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 the same thing, and should be the same thing. Does that make sense? Okay. So that's the strategy I wanted us to look at. I hope you've understood it. Like in this case, you can see that we have an uptrend here. We have a very good uptrend there. We have the red line above. This should be a downtrend. If this is the setting of the moving average, that should be a downtrend. Let me see something. 989. So let's see. 989. So you can see here we have a very good buy stop here, and the lot size is dynamic. It's not fixed. We have our stop loss there, and if the price should go up and touch this level, this trade is going to be triggered, and it's going to be trailed immediately. It enters into money. So this is why we don't have a take profit. Ensure you're trading in line with the overall trend, and at the same time you are trailing immediately the price goes in money. So you're not waiting for price to be in money for you to start trailing. Immediately the price is in money, you trail it. So thank you very much. That should be the end of today's webinar. We are going to meet again next week at the same time. Thank you and see you.